market's still down. Why is that?
Basically, the most important reason, or the most obvious reason, is tightness in the money market. Since the increase of the monetary policy rate in the last month, we've had this tightness in the money market. Of course, the rates at which people get funds now is actually more expensive. As I speak with you, interbank Naira overnight rates are 13.75, and then this is quite high compared to what it's done in the last few months. For corporates who play in the stock exchange, we see that they are doing half-year reviews. You want to review your portfolios and take profits where profitable. And then for individuals, it's summertime. People sell down to buy some foreign exchange for travel, and then shopping and summer shopping for those who trade imported goods on small and medium scale levels.
With the rise in the MPR rate, that's also now having an impact on the interbank lending rates. What impact is that having on liquidity? Because when we'd seen the MPR rate being raised in the last MPC before this one, that started to be a real issue, liquidity in the system.
Yeah, it's a deliberate strategy of the CBN, that's the Monetary Policy Committee, to tighten up on excess liquidity. It's all geared towards the drive of inflation targeting. Inflation figure actually came out on the 15th, and then we saw inflation rise. So they had anticipated that, despite the drop that we had in the last month, they anticipated that inflation was still real, and they still had to put in place stringent measures. And that's the major thing they usually do to ensure that the rates are quite high to keep the markets tight. As I speak with you, the closing figures of the system figures yesterday were just about 80 billion. And then if you look at the amount that go out to dollar sales, when the CBN sells its weekly dollar, on Monday and then Wednesday they sold up to $600 million. When you take out that Naira equivalent, I mean, it leaves nothing in the economy. That's quite tight.
Let's talk about that inflation figure you're referring to, coming in somewhere in the region of 12.4%. As you're saying, higher than was expected. I mean, we'd seen a figure of 11.3% in April. What does this tell you?
Okay, from what I gathered, I had spoken to some counterparties earlier. We thought that the increase in MPR, the two successive increase that they had done, would actually curtail inflation at 11 levels, since the drive is tending inflation towards single figure. But what we saw was actually far from what we thought. We saw that inflation closed 110 basis points higher than what it did last month, despite increase in MPR. It just shows how serious that issue is, and from what CBN had been doing, initially some dealers and analysts had thought that it was being too drastic, the way they had been increasing MPR, but from the reactions and from the way this inflation keeps on going up, and you tend to want to understand and see reason with the CBN, and then it's a major drive for them to defend the Naira, at least modestly, and then curtail inflation. If they can't drag it to single-digit figures, they would try to keep it at the levels they were last month, basically.
Results of bond auctions, Bankole?
Okay, bond auction results came out for 3 years and 5-year maturities. We had anticipated that those maturities would close at about 12 and 13%. But what happened was that there was demand actually, despite tightness. We saw that the 5-year closed at 12.75, lower than what the secondary market was trading for that 5-year maturity. So this just showed that these yields are quite attractive. I mean, despite tightness, we saw that counterparties went, and it may be a sign of FDIs coming in for these bonds at the short end, because if you look at rates worldwide, basically, compared to what you get as coupon or yields on these bonds, I mean, it's a very good positive gap, basically.